Hello and welcome to Nirmal, ladies and gentlemen. We have with us Mr. C.C. Paarthipan, Chairman at Caplin Laboratories, joining in. I'm Hiral, Dadia. Welcome to the show, Mr. Paarthipan. My first question coming to you is, in spite of the kind of difficulties that we have been facing on the back of COVID-19, the performance in terms of Q4 FY20 earnings is pretty okay, at least in terms of where the top line goes. One one aspect that we note over here is with regards to where the margins are concerned, where you've clearly even indicated that there have been some export items which were exported at zero margin to key markets. If you could just help us understand overall from the numbers, what has been the exact impact of COVID-19 in in the fourth quarter?
Okay. Our business, the main thing is actually because of the business model differentiation. If you look at companies of our size, they go and appoint the importer and then come back, and business goes, especially the export business goes through the importer. Whereas we have an end-to-end business model, mainly in Latin America, where we not only manufacture and export, we also control the import, distribution, and the last mile through our subsidiaries. Hence, our profitability is good. And the recent dip is because of a social good that we have to do. There was a request from the government, particular government, who wanted us to identify a product called hydroxychloroquine, which was not allowed to be exported from India. Hence, we had to do it from China. So we didn't keep any margin in that particular product. Just to create a goodwill, we did this. In the process, we got a reward in the form of a $5 million order from the tender. So the thing which we have done in the form of a social good, as I told you, has also helped us in the long run. And then the biggest advantage that we see today in our business is a supply side advantage. Most of the companies, when they are not in a position to keep the goods closer to the customer, we have goods worth of 240 to 50 crores in our warehouse through subsidiary companies in Latin America. That's one of the major advantages which we have created. And we have been in this market for the last 15 to 16 years. With the result, our quality is very well known to the customer, and we supply at an affordable price. Why we say it's an affordable price is because of the fact that we have removed the intermediaries. If the quality is no good, we would not have survived for the last 15, 16 years. And the third issue is, we have been registering our products for the last 15, 16 years. As of now, we have around 300 to 400 products in all these geographies, smaller geographies where we are today. And finally, we have been very consistent in supplying the products. If you are only exporting to the importer, we would not have actually supplied on a consistent basis. As we have our own model in the form of stock and sale, the products are again available actually in our warehouses. I told you before, it helps the customer to come and buy the medicine, and they understand the quality. If the quality is no good, they'll return the goods. They also know the prices are good because currently there is nothing in the form of API manufacturer in countries where we operate in Latin America. They have to depend on India or China. And during COVID disruption, they have not been in a position to get the API. With the result, we become almost like a near monopoly to sell our products with better margin and cash flows now. And the other issue is, I hope you would agree with me, prescription business is affected mainly because of the clinics which have not been working, not only in India, also all over the world. And whereas the shops remains open. The shops actually is the source for generic business. Generic business has not been affected. On the contrary, it has actually increased to people who have a differentiated business model. So these are the factors that really helps our business without any hindrance in the present and future too.
Right. An interesting point that you made over here as well, especially in terms of where, the manufacturing outsourcing mix is concerned. To my understanding, almost 40% of the products are produced in-house, whereas 60% of the products for Caplin Point are outsourced from partners in India as well as China. Now, taking COVID-19 disruption into consideration, have supplies from China been impacted? That's number one. And number two, I did understand that HCQ was something that you directly exported from China. So how does that entire supply chain work then?
Yeah. Compared to other companies, what we do from China is not the import of API, is the export
Mm.
of formulation from China to South America.
Okay.
Since we have a front-end presence in South America, we have decided to go for actually our contract manufacturing in China for products such as penicillin and other products which are cheaper compared to India. That has created an advantage to us. Second, we have been doing business with these companies for the last 10 to 15 years, and they know us, we know them. And we have been giving good business to them. Second, we don't go to smaller companies. We always actually source from the bigger companies. In addition to that, we also test the formulation not only in China but also in South America, where we have our quality control laboratories. We don't foresee any major disruptions. Slight increase in API or formulation is part of the business story. Sometimes if the chemical is not available or the intermediate is not available, that affects the supply of API or affects actually the price of the API on the more than supply of API, the price of API, which might even the price of formulation. Since we are supplying on our own, since we control our business on our own, we also have the advantage of increasing the price and selling to the customer.
Right. So right now, by
Yes,
how much have you seen prices go up?
very, very negligible, except in 2 or 3 products. Very negligible. For
Okay.
us, because as I told you, we have been exporting the formulation. We are not importing the API from China. At the time, what I have found actually, this price increase or price fluctuation happens because of the middleman.
Mm.
Even if the API is available with the manufacturer, they always have actually an intending agent or an importing agent in all these countries. The importing agents are mostly traders. In the normal circumstances, their margins are low. This is the time for them to make money. Hence, they also increase the prices to some extent for commerce.
Right. So now, if you have to see, I mean, the lockdown period was mainly with regards to where COVID-19 was in the first quarter of FY21, which is now spilling over into the second quarter. So, first half of FY21 is something which is going to be cumbersome for all industries across, though there is insulation that comes in for the healthcare space. Are we expecting similar kind of performance that we saw in the fourth quarter to continue in the first half of FY21, or do you expect better growth in terms of top line as well as bottom line and in terms of the margin profile as well?
Okay. To start with, I would like to say that we will maintain actually the same kind of growth. And I will also tell you, what are the 2 most important things at this juncture. Is the COVID discipline, as you know well, for people's safety, and then cash flow positive for business continuity. There is no machine to dream or discipline people. This has to be done by people, especially the promoters and professionals who are at the helm of the affairs of the company. What we have done in our company, I would like to convey here. We created a team of 10 with the head actually in all our establishments for COVID discipline. Here, 2 things which are very important. We have decided to reward the behavior which is good in nature, and we'll also not actually tolerate the casual characters.
Mm.
This is not the time for us to forget and forgive actually the disobedient minds. With the result, what we have found, there is a slight change. I can't say 100% it has happened overnight because this is a culture. We have to build an hybrid culture. We are in the process. The only way is to actually motivate them by giving some incentives. And then what we do currently, like any other company, we also give face mask and disinfectant not only to their family but also to their not only to the employees but also to their families. On top of it, we conduct Zoom video meetings to teach them, coach them, and monitor them the most important disciplines, the 3 important actually specialized disciplines which you also know. So we are very sure the most important one in the form of this discipline over a period of time, it will be built. Because in pharma, what is important, as you know well, is integrity and quality. The additional qualities which are needed is the discipline of COVID discipline. So this is one important thing. Second, because of the business model, I'm very sure it will continue to do well. The reason being, when others are not in a position to export goods because of the API issues or the logistical challenge, we have our goods which is very closer to the customer. The two in the form of 300 to 400 products, which are in line with WHO's essential medicine list. So we're very confident that we are comfortable and we will continue to do business well in the future also.
Right. So with this, I mean, if we go back to the previous years as well, FY19 itself, we've seen gross profit margins of say 55.5%, EBITDA margins of almost 37.5%, and that has been a good year for the company. How long do you think we will take to come back to those kind of numbers once again?
I would like to convey two things here. One, if you look at our balance sheet as on March 31st, we have a cash and cash equivalent in the form of 105 crore. But in the last 90 days, we have already increased our cash and cash equivalent to 195 crore, which is something rarity. I hope you would agree with me.
Correct.
Of course, when we published our 3 months unaudited results, we will also mention about this one. Number two, our payables is in the region of 60-62 crore. Whereas our stocks and the receivables all put together, it will be in the region of 450 to 460 crore. Which means, if you deduct these receivables, we have paid goods and receivables to the tune of 400 crore. With the kind of business model that we have, we will not have any cash flow challenges. That is for sure. That's what I would like to convey here.
Right. No, I understand your point because even when I was going through the numbers, clearly the cash flow has improved in the lockdown period on the back of cash sales that have been happening. So one thing is that yes, that is expected to continue because lockdowns have continued right now. So the cash flow is going to improve for the company. But what the point that I'm making is, how long do you think we'll take to come back to those FY19 numbers in terms of profitability and margins?
Yeah. What is important today, I hope you would agree with me, is the cash flow.
I agree,
margins,
absolutely.
when I think of the top line or even margins, what would happen actually? I'll be tempted to sell the products without bothering about the cash flow, which I don't want our people to do it.
Correct.
Even if I don't actually make profit for 1 year, I'm sure that I'll be in a position to make it in the next year. But what is important is if I can increase my deposits to many-fold in the next 2 years, I can even go for an inorganic growth in the form of acquiring a company and increase the top line and bottom line.
Correct.
So the focus is the focus will always be on cash flow positive.
Absolutely.
That's what you would also see in the years, in the months to come.
That's a very interesting point, Mr. Paarthipan, that you made right now as well, that the focus of the company right now is going to be to continue to remain cash flow positive. Yes, we're not really giving up to that extent in terms of margins and profitability, but break even and cash flow positive is going to be the core perspective that we're going to look at. And with this, tell me one thing, another aspect is with regards to the B2B e-commerce website that has come in as well. How much is that helping in terms of sales?
Yeah, it really started helping now because when people are not mobile to the interiors of various places, we are in a position to do the business through our 10x. But over a period of time, we are sure that it will be in a position to do very well. It's happening in the form of actually like $300,000-$400,000 business per month, which is not huge, but is going to go in such a way that will increase our business over a period of time.
Right. And with this, if you could just help me understand with regards to exports as well as the domestic sales that are happening in India, are we expecting the revenue mix to change anywhere?
We don't do any business in India. Our total business is exports only. Are you talking about the outsourcing in India, or are you talking
about the outsourcing bit in India?
Outsourcing business is based on the products. Now, what we do now, we will be focusing more on products which are critical and reduce the non-critical and low-margin products.
Okay.
And we are also planning to construct our API factory, which will take 1.5 years to complete. After that, we may even go for some of the products which may not be critical, But again, the customer insists for those products because with that product, they'll be able to sell all other products. For example, if the product is like ibuprofen, and most of the companies, they don't make money. But again, the customer is in need of that product. What we are planning is we want to go for the API for that one. But also for APIs of our own products, which we have filed or which are about to file in US markets.
Right.
So these are things which will help. Coming to outsourcing of generic products, plain vanilla generic will continue. High tech and products which are very complex will be manufactured in our own facilities, as we don't want our know-how to be actually spilled to others. Today we are in a position to do it because of our R&D strength. Today we have 3 formulation R&Ds, 2 for injectables, 1 for actually OSD. We also have 2 API R&D. In addition to that, we have a CRO. So we are like any other good company which is in the process of growing. We have our own backward integration. We have the R&D. We have facilities which are in line with international standards. So there is nothing in the form of that we have to focus more and more on outsourcing. But outsourcing will continue, as I told you, for plain vanilla generics, not for high-tech products.
Right. And with regards to the geographical distribution as well, again, as we know, emerging markets is majority of the revenues, Latin America as well as Africa, if we look at. Now, with this, how are the markets responding right now, if you see in terms of where impact of COVID-19 goes?
Yeah. Markets, as I told you, actually, for us, we don't find any major challenge because of COVID, except, of course, few things which we don't know: who will fall sick, how far it is going to affect the health of our people. That's one thing, which is not easy to say at this juncture. Number 2, in addition to the smaller markets, we have already started registering products in the bigger geographies of South America. That's where you have big business in the form of tender and private markets. So that work is going on. And then in addition to that, we are also increasing our filing for US market. So in 2 to 3 years from now, I'm sure it will become a part of actually the companies which are in the process of growing in Latin America and US.
Right. And with this, if you have to see revenue by channel, through distribution, it's maximum where you get 70% of your revenues. Pharmacy sales and tender business is again totally around 25 to 30%. Are we expecting a change in terms of where the revenue by channel mix is concerned from here on?
Yeah, definitely there will be a change, say 2 years from now, because the bigger geographies in the form of Mexico, Colombia, Chile, Peru, we are in the process of registering the products, which will take 1 year to 2 years, and our business will improve our business, say after 2 years. That's for sure. Until that time, we will maintain the business with an eye on the cash flow.
Right. So how do you expect the channel mix to change? As in, will revenue by distributors come down from 70 to what levels are you expecting? And by how much will tender business and pharmacy sales then increase?
The exact percentage is very difficult to tell you at this juncture. The distributor business will slowly go down because we are currently in smaller geographies. When we enter into the bigger geography, one tender may even fetch us actually a huge volume. At that point of time, naturally, the institutional business will go up. And what is needed for tender business is 2 things. One is in the form of API support. Other one is the clinical, BBA studies, clinical studies. Both will be in a position we have also. One, of course, we already have. Other one, we already acquired the land. We are going to construct the factory. So we are very sure that we'll also become a force to reckon with in this part of the world, where the tender business is the mainstay.
Right. Another thing is that you have a new target to convert the top line of FY16 into the bottom line of FY22. Taking the current market scenario into consideration, do you think it's going to be an easy task?
This is pre-COVID, of course, we said, and we have also honored it. Let me keep my fingers crossed until actually the COVID situation becomes better, in the sense, when the curve actually changes. Now it's not the time for me to commit something in the form of a tall claim.
Right. And
it was possible at one point of time. We have made it possible. There are two reasons. One is actually this COVID issue. Second, we are also entering into bigger geographies. And these are the geographies, which are not that known to us, although we are very sure because we have all the wherewithal for success. But I don't want to commit something, in the form of when exactly our top line will become bottom line.
Right. And overall, any acquisitions in the pipeline in the current financial year?
No, we will not actually go for any acquisition at this juncture because the mobility itself is an issue now.
Mhm.
Only increase our cash flow. We will go for more and more actually cash accruals in the form of internal accruals will be increased. We'll create a cash chest. Then we'll think of something meaningful and better for future in the form of acquisition.
Right. And currently, if we see in terms of the US market as well, almost the market size of the products that have got approval or are under approval is almost around $700 million. How much do you think will you be able to realize out of this in the next 2 years?
Yes, $700 million, at least 10% of it. 8 to 10% is the minimum actually. Wherever we enter contract with our front-end partners, they give us a guarantee of 8 to 10%. Some they go actually above 8 to 10%, some they remain at 8%. If they don't reach it, then we also have the opportunity to go for other people. Their exclusivity will become non-exclusivity. So we are very sure we can guarantee a business of, we can guarantee to get actually a business, we are guaranteed to get a business of 8 to 10%.
Right. And we've also, said that the total market opportunity for Caplin Point in the near future is around $2.7 billion, wherein, the pipeline which is to be filed is almost around $2 billion. So how many years do you think we will take to achieve these kind of, probably get the maximum out of the $2.7 billion?
I would say between 5 to 6 years, we would also become a force to reckon with actually in this part of the world.
Right. And very lastly, from here on, in terms of HCQ as well, as you mentioned that you've been supplying the same from China, what is the kind of, are you seeing increased sales right now? And do you think that could be a higher revenue contributor this year?
No, the major revenue contributor is our own manufacturing. In the sense, the products may not be 60% compared to actually 40% actual manufacturing, 60%. When it goes to the market, the profits and cash flow comes mainly from our products because all high-tech products. These are all not actually plain vanilla generics. For the common product for which we don't need in the form of any R&D, we actually manufacture it not only in India but also in China. So the focus will be more on our own products. That's where the competition is lesser. That's where it's not easy to source it actually from China or India. So our focus will be more on high-tech products.
Right. And what's the outlook looking like with regards to the working capital from here on?
I don't think we need any working capital actually. We don't go for any working capital. We
Right,
never had working capital in the last 10 years. Maybe another 4 or 5 years, unless we go for a huge acquisition or something.
Right, so there will be no fundraising plans, at least in the current financial year.
Please.
Right. All right, Mr. Paarthipan, a pleasure speaking to you. I hope you enjoyed the conversation as well. Great insights that we've picked up from you for this space. We will come back to you after a couple of months to understand how the industry is performing from here on. But thank you so much for joining us on the show.
Thank you so much for giving me an opportunity to say about my company. Thank you so much. Thank you. Good day to you. Thank you.